All right. Welcome, everyone. And today, first of all, let me introduce myself. My name is Willie Oyola, the private money savant. And today I'm going to be discussing about something that I'm very, truly passionate about, something that I has really helped our business and really helped a lot of the folks we work with. And it's the world of private money. And the world of private money for us in our business is really all about stress-free real estate. So I'll jump into the slides here and we will present on how this works, what is private money, and how it all relates to real estate. Next slide. Before I jump into it, a quick disclaimer. This presentation is for educational purposes only, and it's not intended to be any type of financial advice or legal advice. It's based off of our experiences and also just for educational purposes. And what to expect today, you'll all share a little bit about who we are and why you should listen to me, some of our past projects, what is private lending, some benefits and sources where you can get private money or where you can find money to lend, and of course our private lending program. And we can finish it up with Q&A, which you can actually email to us or hit me up on a DM. So again, about me, I'm Willie Oyola. I'm a private money teacher. I own and operate a rental portfolio currently valued at $6.2 million. Prior to that, I was a former USMC veteran. I was in the Marine Corps and stationed in Okinawa, Japan. And then while I got out the Marine Corps, I was living in Japan for 10 years, met my beautiful wife, Haruna, and we had 3 kids. They were all born in Japan. And from there, we slowly got into real estate, little by little, not the traditional way that I was, that most people are used to. However, I didn't know what I was doing back then. Back in 08, 09, when the real estate market crashed and the economy went down, I was overseas. I just got out the Marine Corps and enjoying life and being young, and didn't really know what was going on with the whole stuff in the U.S. because as a government contractor, it really didn't have any effect on us. And, my parents kept urging me and kind of planting this seed in my head about, hey, you should really look into Florida, because at this time it was already 2010, 2011. They were like, hey, the prices are dirt cheap in Florida. You really need to get in there. And I thought, well, you know how it is when your parents are telling you one thing is in one ear, out the other. That's exactly what it was for us. I didn't pay attention. I was like, oh yeah, sure, that sounds cool. Didn't take any action. And then 2012 came around and the prices were going up. My parents were like, oh, you really need to buy in Florida because we're going to retire down there. And we can't buy right now because they had their career and life still back home in a DC area. So they couldn't buy, but they knew that, I was making pretty good money, and they were like, hey, buy something in Florida, put the down payment down. It'll get your foot in the door with real estate, establish your credit, and, we'll pay for it. So, I finally went through and did it, put 20% down the traditional route, bought a property, and didn't know what I was doing, didn't make any money off of it. I just put the money down. They were paying for it, basically like rent and breaking even. Then from there, I kept that kind of piqued my interest slowly but surely. Finally, 2015 came around and the prices were really starting to creep up. And that's when I intentionally bought our first rental property, doing the traditional route, 20% down. And next thing you know, from there, we bought more rentals, did some fix and flips, and we got to the point where we couldn't buy anymore because we had too many properties. The banks, we had to jump through hoops. We had to go through all of their underwriting processes, and we were at the mercy of the bank. And that's when I was like, okay, there's got to be a better way. So I remember I was driving and commuting, a good hour or so to work. And then I heard on a podcast about private money. There was a educator who was talking about this world of private money, and it just clicked for me. And I was like, I had that aha moment. Wow, private money. This is what we're missing. This is what we're needing. So that's where we got into the world of private money. And next slide. So why listen to me? Currently, we have $3 million in private money. We're currently working with 20 active private lenders, and we've been investing in real estate since 2012 when we bought our first property. Now, what's really cool is I've been investing, me and my wife, since 2012. However, I surround ourselves with a team of people who have well over 80 years of experience, Go to the next slide, please. So here's my team. As you can see here, I have Andrea. She's our real estate attorney. Andrea's been doing real estate since, I guess she said the late 80s. She was a real estate attorney. So she does know exactly how to work with loans and mortgages in real estate. Wes Fontaine, we do a lot of our closings with him. He's local to our area here in Crestview. And then Jay Connor, who is the private money authority. He's the one who taught us our private money program. He's the educator. He showed us how to do it. And now myself as the private money savant, I'm showing people how to actually make money in real estate and get passive income from real estate using private money or being a private money lender. My coaches, Coach Chaffee and Coach Crystal, just like in life and teams and sports, you got to have coaches. Same thing with business. To be a top performer in anything you do, you got to have a coach, whether it's your athletes, whether it's in life, personal, and in business as well. So we surround ourselves with coaches, mentors, and team and the team of people. And we have a lot more of other people, but I can go on for days just on the importance of the team. Next slide. So now with our business, now's the best time to buy real estate. And you may be thinking, well, Willie, I don't know, man, interest rates are high, this and that. All this insurances are high in Florida and things are taking forever. Well, not for us. For us, we're buying at 30 to 50 cents on the dollar. And there's a lot of inventory out there. If you look around, there's houses that are distressed that need to be sold. They're not listed for sale on with the real estate agent. We buy specifically off-market real estate. Next slide. And here's some before and afters of some of our recent properties that we've done. This is in Crestview. You can see the before there. This was also purchased. Here's the after. This was purchased with private money. Also off market from a distressed property seller. There's the after. The next one. Here's the entrance of that home when we first bought it. So when we bought it, it was just like that. No flooring. Baseboards were painted wacky colors. Next slide. And there you can see the after. So all of this was done with our private money lenders. They did not have to deal with any of this construction with contractors, any of that stuff, because that's what we do. Next slide. There's the kitchen from when we bought it. And there's the after. And I'll have a couple more. This was a property we did in Crestview, beautiful acre lot, also a distressed property seller. So the beauty about private money is that not only do our private lenders make money in real estate and invest in real estate passively, but they also help distressed property owners. This seller was a lady who had called us from our inbound marketing, and she was in a really bad situation. She didn't want people coming through her house to list the traditional route. She was quite frankly embarrassed of the home and the situation. So she confided with us, and we worked with her for about 6 months, and we finally closed on this house. So there's the before, there's the after. Next one. There's the before. This was original home from the late 80s, I believe, when she bought it. One owner, completely original inside. Next slide. There's the after. Brought it up to 2026 standards. Next slide. There's the before. There's the after. Next slide. So now this brings us to, you might be saying, okay, cool. Well, now what is a private lender, or who is a private lender? And a private lender is simple. It's an individual just like you, just like me, anybody who loans money from their investment capital or their retirement accounts. Now get this, private lenders are not a partner. It's a one-on-one transaction. Now in a partnership, the old way of doing business, somebody puts up all the money, and guess what? The other person does all the work, and then you split the profits at the end. Well, that's not how it works as a private lender. As a private lender, there is no profit splits. It's a known, reliable, safe return on your investment, because a lot of times when you're dealing with partnerships, they don't always go so great. I think I've heard more horror stories about partnerships than I have good stories. Now, there are good ones, but there's also a lot of bad ones. So we mitigate all that by just doing a fixed rate return with our private investors. This one. Now, why would you be interested? Now, our private lenders, they love doing business with us because obviously they can earn up to 10 times more, 20 times more, 10 to even 20 times more than they can with traditional sources. There's no volatility. That's a big one. Now, get this. When you invest your money, whether it's, $50,000 or $500,000, and it's invested in a stock or a bond with your financial advisor, that that money that you put in can go down the next day. It could go up, could stay where it's at, or can really plummet. It's volatile. It moves up and down, right? Based on the economy and the market conditions. It's not like that with private money lending. Our private lenders get a fixed rate of return. Now, how can I pay such high rate of returns? We're buying at deep discounts. Now, deep discounts means that we're buying at 30 to 50 cents on the dollar. So as I mentioned before, we're buying distressed properties off market. There's no middle person, and we have multiple exit strategies. So what that means is when we're buying properties with using private money, our private lenders are secured by the property and we have multiple exits. So what that means is we could either sell it traditionally with a real estate agent, fix it up and rent it, keep it as a rental, or we could even do a lease option, which is an advanced strategy where we could actually bring in a tenant buyer that can't qualify and they can rent the home, put a non-refundable lease option fee, and then get to home ownership. And we get properties occupied fast. I mean, right now we just had a property that we listed for rent, and before the tenant moves out, we had another person in there. And that's all with private money. That house, we own it with private money. So our private lenders are the bank on that. Next slide, please. Now, why would I use private money? Well, obviously with private money, I can do a lot more deals. We can move a lot quicker. I could do a limited number of deals. Private lenders, I have private lenders on one property, on a couple properties here. I could do fix and flip with the private lender. I can do rentals with private lenders. I can do all of our real estate strategies with them. I can do new builds. Our private lenders get to enjoy investing in real estate passively. Their money's working for them harder, and it's working for them, and it's much smarter than them for them to try to go out and do that stuff on their own. Next one. Now, a lot of people are always wondering, well, I don't have money. I don't know where, my money's tied up in the stocks or my retirement account. So a lot of people get their money from retirement accounts. You can get your money from CDs. I would say about half of our private lenders right now were in CDs. There were the individuals who like to know exactly where their money is, and they're very conservative, so they didn't want to put it in volatile markets, so they put it in a CD. Now, obviously, you're at the mercy of the bank when you're only getting 3 or 4%. We pay our private lenders a much higher rate of return. They take that money, loan it to us. We give them a fixed rate of return on their money, similar to what a CD would do when you get dividends. We pay our private lenders interest only on top of their money. Money markets is another one. Just wherever you have money sitting around, could be retirement accounts, could be lazy money that's just, in the savings. Now, I mentioned retirement accounts. So with private lending, you could be the banker with your retirement funds. It's a little known strategy that not many folks know about called a self-directed IRA. With a self-directed IRA, you could actually loan your retirement account, whether it's an old or employer 401k or an old IRA that's, with a financial advisor or a stock brokerage house. You could actually move those funds over from your current plan administrator to a third-party custodian. Like, for example, this one we use, it's now called Inspira Financial. So Inspira Financial is a third-party custodian that's approved by the IRS to hold funds. Now, these retirement account can then, once your funds are over there, you could actually loan your money out to real estate investors and get a high rate of return on your money, either tax-free or tax-deferred. Now, how are you protected? You're protected because when you loan your money out through real estate to a real estate operator like us, we're going to get a mortgage, you're going to get a promissory note, title insurance, and homeowner's insurance. So, for example, when you're loaning this money out, we're going to have a real estate closing, just like the bank would. In other words, a private lender, in essence, is going to be just like the bank. So instead of me going to Wells Fargo or United Bank or whatever bank out there to get a loan on a property, I go to my private lender's funds, and then I give them a mortgage. They get a promissory note. I get title insurance. They get homeowner's insurance, just like they would if I was to go to the bank and get a loan. Our private money lenders are just like the bank. Next slide. Now, where do private lenders send funds? I'm actually dealing with a lady right now. She is thinking of loaning me money for a deal. Actually, she is doing it. She just texted me right before this webinar, let me know she's going to the bank to wire the funds. And I told her, yes, I sent her the wire instruction that's going to my real estate attorney's trust account. Private lenders do not send funds directly to the real estate operator, whether it's me or your friend or family. Never, ever do that. You want to have an actual real estate closing with a real estate attorney, a closing agent, and it's all accounted for. Private lenders never send funds directly to us. Next slide. Now, should you be concerned about market conditions? A lot of people are concerned about market conditions in the real estate and this and that. Well, no, because again, we're buying at deep discounts to motivated sellers. And more importantly, you're well secured by a low loan to value ratio. Again, just like the banks, you're going to hear me say that a lot, just like the banks, because whenever you go to a bank to get a loan for a property, or for example, you want to get a line of credit against your home because you got significant equity, the bank's going to make sure you have a conservative loan to value. They don't want to loan you more money than the house is worth. So with our private lenders, we make sure that they're secured well and there's enough equity. So what that means, for example, is if I have a property that once it's fixed up and ready to go is worth $200,000, and I have a private lender who's like, hey, Willie, I've got, $200 ready to go. Let's go buy that house you're talking about. I was like, all right, well, I can't let you do 200 because that's too close. There's no equity cushion there. The max I could allow our private lenders to do would be $150,000. That would give us that 25% cushion. Next slide. Now, a lot of times when folks think about private money lending and investing and all that other stuff, they're thinking, wow, this sounds great, but does it cost money? Is there any fees involved? No. With our private lending program, our private lenders pay no fees. We pay all closing costs. We pay all attorney fees, nothing. The private lenders pays nothing except wire fees. Wherever their money's currently at, they'll wire that over to our closing attorney. We handle all the recording fees, all the doc stamps, because again, here's another thing that's really important is this, whenever somebody's working as a private lender in a real estate deal, that money is secured by the real estate. There's taxes that are being, doc stamps that are being paid on that, and it's getting recorded at the local courthouse. All of that is covered through us and our attorney fees as well. Next slide. Now, I mentioned the documents. We have the 4 main documents are going to be your promissory note, as I mentioned. The promissory note, whenever a private lender loans funds to a real estate operator like myself, they're going to get a promissory note, which is exactly what it is. It's a promise to pay. It's a legally binding document that outlines the loan term, the borrower, the lender, the loan amount, interest, payments, and all that stuff. Mortgage or deed of trust. In Florida, it's called a mortgage. So they get a mortgage. Now, the mortgage is the security instrument that collateralizes that promissory note, collateralizes that note, which is for, let's say, $500,000 against the real estate. So that's the security instrument right there. So we don't borrow unsecured funds. It's secured and collateralized by the real estate. That mortgage is recorded at the county clerk at the courthouse. Insurance policy. Here's another thing. Just like the bank, when you get a loan on a house or you get a loan to buy a fix and flip or you get a line of credit on your property, the bank's going to ask you to put them on the insurance policy, because the bank, and in this case, our private lenders, they want to be sure that if the house burns down, gets blown away in a hurricane, that the insurance policy pays them back. They have an additional interest in the property. They're called a loss payee. They may call it a mortgagee, which means that they are the interest on that property. So that way our private lenders are secured. Title policy, just like the bank, when you get a loan on the house, the bank requires you to get a title policy. That ensures that they have clean and clear title. There's no other liens or defects on the real estate. Same thing with our private lenders. We do all of that for them to make sure they're protected. Next one. Now, ranges of investments. Common questions we get is, what's the minimum to invest? Our minimum investment right now is $30,000, but most of our private lenders do at least $50,000, because with the $50,000, they know that they're going to get a higher rate of return, obviously, on the interest that they're getting. And I can fit those along better with deals as they come in. Smaller amounts are harder to find deals because obviously with cost of construction and rehabs and property values, it's a lot. Prices are inflated. So it's a lot higher to buy, and we could use like the 30 to 50,000 range more for rehabs. Larger amounts is more for the purchasing, where we'll bring in a private lender to purchase it in one position. We'll bring in another private lender with a smaller amount for the rehab. Next slide. And that's pretty much wraps it up right here. If you do have any questions, I do ask that if you'd like to connect with me, and we'd have a one-to-one talk, and we can see how we can better serve you, because, you know, private money lending, it may be a good fit for you, or maybe it works for somebody that you may know. And we'd love to sit down and talk to them to see how we can help them put their money to work. All right. Thank you.